All right, everybody. We are now live. We've got about 30 seconds, so I'm gonna go ahead and go let y'all know what this is all about. Okay, naturally, this is about Cache Rentals, my tech startup that I'm starting, and we are in the pre-seed funding stage. Okay, tonight we're gonna go over 40 rideshare tech startups that you all knew nothing about, but they're making millions and billions, and they're making their early investors millionaires and billionaires. And these are not your normal ones, not the Uber, the Lyft, the InRide, the Instacart, the Airbnb, none of the ones that you all know about. These are ones that you all know nothing about. And I'm going to be previewing and showing you all 40 of them and showing you how they're making money and how many investors they have and how they're doing after they exit the pre-seed round. Now, pre-seed funding is the very first stage that founders have to raise money to start their actual company or their actual product or idea or tech startup or whatever it is. Cache Rentals is a peer-to-peer commercial vehicle rideshare mobile application. And we are the first, and we will be the first one doing this for the commercial vehicle sector. So we literally have no competition. And we're going to be launching in 5 countries: United States, Canada, Australia, the UK, and France. Okay. We're going to launch in all 5 of those countries simultaneously. Once we have the app coded and the app goes live, it's going to be in 5 different countries. Okay. Much like Turo did, same thing that Airbnb did, Uber, and some others did. Okay. Now, during the pre-seed funding stage, the SEC, the Securities and Exchange Commission, United States Security and Exchange Commission, that's the stage where they allow founders, people like myself who create these business models, the person who created this business model, they allow the founders of a company, and the founders are anybody who owns 10% of the company or more. This is where they allow the founders to reach out to friends, family, and associates. In other words, non-accredited investors. These are people who do not have a net worth of more than $1 million. Individuals who don't make more than $200,000 a year as a single person, or who don't make more than $300,000 a year as a married couple. These are called non-accredited investors. Accredited investors, as you may know, are just the opposite. Those are people who are worth $1 million, who do make at least $200,000 a year as a single person and make at least $300,000 a year as a married couple. And they must show proof that they've done so for the previous 2 years by showing their tax returns, and they must show their bank statements to show that they're on track to make that kind of money in the current year. Okay. At this stage, the pre-seed round, which is the very first stage of raising capital for your idea, the SEC allows founders to reach out to friends, family, and associates for them to become part owners of the company. This is the only stage, by the way, the only stage that the SEC allows non-accredited investors to take part in. In other words, this is the only stage where regular people who are not millionaires can take part in becoming a part of a startup, in investing in a startup. This is why the wealthy continues to get wealthy and everybody else stays, pretty much on where they are, because most people are not made aware of when a startup is launching, so they don't even have a chance to invest in it at the pre-seed stage. Because after it exited the pre-seed stage, you can invest in it. Only wealthy people can. Hedge funds, money management firms, VCs, venture capitalists, angel investors, all these people that have these millions and billions of dollars, they're the only ones who are allowed to invest in startups after the pre-seed round, in the series funding round, series A, B, C, D, and E, and until it gets to the IPO stage. Okay. Now, the funny part about this is this: in the pre-seed round, individuals can buy shares of a company for as little as a half a cent per share, sometimes less than a half a cent per share. Less than a half a cent per share. That's what's called equity crowd funds, which what we have. We have an equity crowd fund where you can invest as little as $36.62 in Cachet Rentals right now, and you would get 7,813 shares when you invest during the pre-seed round. Okay. Now, if you all want to chat, you can chat over here. You see if I got my chat box up. If you want to ask questions or anything, you can ask questions during this whole presentation through the chat. Okay. Now, again, like I said, after the pre-seed round, regular people can't invest. So this is, if you all are not millionaires, if you don't make at least $200,000 a year as a single person or $300,000 a year as a couple, this is going to be your only opportunity to get in on a ride share startup before it goes to the regular seed funding rounds, because you can't do it after that. I can't even accept your money after that. I can only accept money. We can only accept money from accredited investors after the pre-seed round. Now, what determines when the pre-seed round closes? Well, like anything, in order for big money people, millionaires and billionaires, hedge funds and money market, and financiers and angel investors, in order for them to invest in a company, you have to prove that you have the ability to raise capital. Okay, hence the pre-seed round. So once we prove that we can raise at least a minimum of $250,000, that is the minimum amount that we need to raise. Now, we can raise more, 1.5, 2 million, 3 million, 6 million, whatever the case may be. But you must raise at least $250,000 in order for the SEC to then register you with the SEC, and you can register. Then we can register the company, and we plan on creating our company in the state of Wyoming because we get tax breaks and all other types of benefits there. But once we raise $250,000, then and only then can we exit the pre-seed round and go into the series funding round. Now, the bad news is after we do that, if you haven't invested, if you haven't gotten in the shares before that, then you're not going to get in the shares unless you're a millionaire, unless you have a net worth of $1 million and you can prove it, or unless you make at least $200,000 a year as a single person or $300,000 a year as a married couple. Okay, because after that, those shares get very expensive. This is why the SEC does not allow non-accredited investors to invest outside of the pre-seed round, because the shares get very expensive, and they do not want people investing more than, I think it's more than 30% of their annual income. Okay, because the shares get very expensive after that. Now I'm going to show you all some companies, rideshare companies, like that's the sector that we're in, rideshare startups. I'm going to show you all 40 rideshare startups that you all didn't even know about. So you've missed out on because they have all exited the pre-seed round. Some just came out of the pre-seed round. Some are in the third round, fourth round, fifth, and sixth round. But I'm going to show you how much money that these big companies start throwing at these companies once they exit the pre-seed round. Okay, so let's go ahead and show y'all what we have, which is Cachet. This is Cachet. Okay, Cachet Rentals, connecting commercial vehicle owners globally with renters, enabling millions to easily, conveniently, and affordably rent the assets they need to become entrepreneurs and business owners. This is my tech startup. I actually started this. I came up with the idea about 3 or 4 years ago. I didn't really get clued into how startup capital is raised and the blueprint of how to do this until about 2 years ago. So I started restructuring it and building the website, coming up with the business model, how we were going to make money, the whole 9 yards. And I finally got it all done about 6 months ago. And we started promoting this about a month ago. We started promoting this about a month ago. Now, for those who hold on, I think I need to share my screen because I don't think you all are seeing my screen here. Let me share my screen. I do apologize. Okay. Share my screen. Entire screen. Yeah. Okay. All right. Here we go. Yeah, this is Cache. Okay, so Cache, formerly known as Easily. As I mentioned before, Cache Rentals connecting commercial vehicle owners globally with renters, enabling millions to easily, conveniently, and affordably rent the assets they need to become entrepreneurs and business owners. Okay, as I said before, I started on this concept about 4 or 5 years ago, and it was going to be a commercial trucking leasing company. But then there was too many, regulations and a whole bunch of stuff that we had to do. So I started saying, okay, I got to rework this. So I looked at companies like Uber, Lyft, Airbnb, and Turo. And I looked at what they did. I studied their business model. Those companies started out as a brick and mortar type business, but then they quickly realized that if they could just build a mobile application and then have people who own these types of vehicles list their vehicles on their mobile application, they charge a fee or to get a percentage of the services and stuff that comes from it, then they figured out that they can make a ton of money without actually having to own any of the vehicles or properties like Airbnb. Airbnb runs an accommodation type business model, but they own nothing. They own no property, but they're making billions worldwide on all over the country. Uber is running something that's very similar to a taxi cab company, but they own not one vehicle. They created a application, a software for people to come on and list their vehicles, register their vehicles, so that they can have people come on and who need rides in their areas, and then they can go and pick those people up and make money. Okay, that's all the mobile. And by doing that, they are able to circumvent all of the regulations and stuff that would require a normal taxi cab company or a normal trucking company or a normal, hospitality or accommodations company to have. They can circumvent and bypass all that because they own not one item. They're just a tech company. They're just a software company. They just own the app. So I said, well, instead of trying to become a leasing company, a truck leasing company, why don't I create an app, have an app built and coded to allow people who own commercial vehicles, and by the way, not just semi-trucks, anybody who owns a commercial vehicle to come on and list their commercial vehicles on our app, and then for people to come on and rent those commercial vehicles from them, and then we make money from those rentals and all the other services that are associated with running that. Now, as you can see, Cache is the first peer-to-peer commercial vehicle ride share for the global marketplace. A rideshare mobile application that connects commercial vehicle owners globally with renters, featuring buses, vans, delivery vans, semi-trucks, box trucks, pickup trucks, construction vehicles and equipment, limousines, utility vehicles, tractors, trailers, food trucks, motorhomes, marine vessels, boats, private jets, planes, helicopters, and more. Anything that's considered a commercial vehicle, people will be able to list them on here, and then they will be able to, other people will be able to come on and connect with those people and rent those vehicles directly from the app, just like a Turo, just like an Airbnb. Okay? If you all want to watch some of these videos, you can. I'm not going to play all the videos, but you can watch some of these videos that we have on here. Just imagine a mobile application for the global market that provides easy connectivity for individuals and companies to list their commercial vehicles and begin earning passive income and enabling millions to easily, conveniently, and affordably rent the assets they need to become entrepreneurs and business owners. Now, as you go through here, you'll see that we have on here to show you exactly how Cache would work, how the business model would work. We also have here where it says become an early investor. If you stroll through it, you'll see some verbiage on how it works. We have some people. Give me a minute, my freezing up here. We have some people who have given some testimonials about what they think about the business model and things like that. So y'all can go through and you can watch it. And we have a whole list of videos here in our video library if you want to watch those videos. At any time throughout this entire website, you can click on any of the become an early investor. If you click on become an early investor, anywhere throughout the website, it'll immediately take you over to our area of where you can look at and view all of the investment options. Okay. We even have a PDF that you can pull up that shows you how we would generate money, how the company generates money and create wealth for its investors. You click on that, it pops up, and there it is. It pops up, and we have that. It tells you how we generate income. Cache is a peer-to-peer commercial vehicle rideshare platform, generates revenue through various channels, commission-based model, commission on rentals. Cache charges a commission on each rental transaction, typically ranging from 10 to 20% of the rental fee. Same thing that Turo does, same thing that Airbnb does. Service fees, additional fees for services like vehicle maintenance, insurance, and roadside assistance. In other words, we have contracts and partnerships with insurance companies, roadside assistance plan companies, and vehicle maintenance companies. Also on factoring, on all the stuff that people are going to need in order to, because if they rent these types of vehicles and they're starting a business, they're going to have certain things that makes them legal. So all of that is going to be directly on the app for them to go and get their insurance, for them to connect with the factory company, get signed up with the factory company. If they need to get with the factory company to get signed up with a roadside assistance plan, or maintenance plan, vehicle warranty plans, whatever they need, they're going to be able to do it directly from the app. Okay. Just like Uber has Uber Eats and all the other stuff, you can do all this stuff right there on the app. Just like Turo has it where you can get your insurance and all that type of stuff, and roadside assistance directly there on the app. And every time someone gets those types of services or whatever it gets to be, they get monthly, and they're paying a monthly fee for those services. Guess what? Our investors and Cache is getting paid too. Okay. Monthly subscription. Vehicle owners pay a monthly subscription fee for listing their vehicles on the platform. Now, they don't pay for just a regular listing. If they want to upgrade to a premium listing where they get more visibility, then they pay an extra fee for that. By the way, those people who are renting those semi trucks and box trucks and stuff like that, we will have our own load board, what's called a high dollar load board, that will be featured on the app too. That only shows loads that are paying $2.50 or more per mile. So we have our own high dollar load board that they can go in and get loads from. And guess what? They pay a little monthly subscription for that, $19.99 a month. And we get that fee too as well. Okay. All these are ways that we make money for our investors. Data-driven revenue streams. Data analytics. Cache collects data on vehicle usage, rental patterns, and user behavior, which can be sold to third-party companies. Advertising, displaying targeted ads on the platform. Investment and equity sales. Now, this is what we're going to be talking about doing this presentation. Early investor incentives, offering simple agreements for future equity. Those are called safe agreements to early investors. Equity sales, potential future IPO or acquisition. Other revenue streams, partnerships, and collaborations, partnering with logistics, transportation, and delivery companies. Financing options, offering finance options for vehicle purchases and rentals. Okay. For a full breakdown of our revenue model, just email us at click on here where it says our investor relations team, and you can email us and we'll send that to you. Okay. All right. Now, these are pre-seed investment levels. Okay. When you go on here, you can scroll through here. You'll see that the entry level starts at just $36.62. That gets you 7,813 early investor shares. The anticipated portfolio value in 3 to 5 years, that's how long we're figuring that it will take us to get to a level of where we're ready to register as an IPO, initial public offering. Based on the anticipated growth of the company and the money that we'll be bringing in, within 3 to 5 years, if you had 7,813 shares, we anticipated that your portfolio value would be somewhere between $383,000 and $766,000. That's based on if we have an anticipated IPO stock price of $49 on the low end, $98 on the high end. By the way, Turo was planning on going public, but they decided not to because they're actually making more money than they anticipated as a privately held company. But their anticipated stock price would have been $118 per share, is what the anticipated stock price would have been. So in other words, if someone has 7,813 shares and at $818 a share, that's about $1.2 million is what someone shares would be worth. So that little $36.62 investment that someone, if they would have made that with Turo when they first started, their stock would be worth about $118 a share now. That's how pre-seed investing works. If you get in at the beginning stage, and we have different levels here, as you can see, and you can you click on any of these, and it'll take you over to and select the option to take you over to our Stripe account, where you can go ahead and proceed to purchase your shares. Okay. Now, let's get into what we were going to talk about. All right. All right. I need to explain something to you all. There is an actual blueprint to creating wealth. Okay, wealthy people know this. Okay, that's why wealthy people have been investing in startups for decades. I mean, decades with an S. Okay, wealthy people don't really invest money into the stock market because they know that if you're investing in stocks, that's really not going to make you personally a whole lot of money, because the stocks don't really change that much unless you're doing what's called day trading, which means you're trying to calculate when it will rise, when it will fall, and you're betting that it's going to either lose or it's going to gain. And depends on how much it loses and gains is how you make some money. Well, that's very risky, extremely risky. A lot of people lose their life savings trying to do day trading. Okay, a lot of people make a lot of money in day trading, but really it's extremely risky. But most wealthy people know that investing in startups is how you make your real money. Putting money into startups is where you make your money. Why? Because you can get in at the beginning at a very, very, very low cost, less than 0.5% a share. And then these other wealthy people start pushing money into that startup to push it and to help it grow and expand and become more profitable, get more business, get more clientele, and until it gets to the all the funding rounds, and then it ready to go to IPO. Because once they do that, now they put money into this thing, but now it's at the IPO and the SEC gives it a valuation. Now they're going to make a ton of money. Why? Because their share is going to be worth a whole lot more money. Okay. That's how it works. Now, I'm going to go over 40 different companies and these are all ride share startups that you knew nothing about. Not the Uber, not the Lyft, not the, Turos or the Airbnb. We all know about those, and you can't get involved in those anyway. These right here, you can't get involved in because they have exited the pre-seed funding stage. Now, if you're an accredited investor, you can still invest in these companies. But if you're not an accredited investor, then you're just out of luck. You're just out of luck. Okay. First company we're going to look at is a company called Boat. Okay. Boat is a transportation platform that offers services such as ride hailing, micromobility, and meal delivery. Okay. Details of the startup. They're out of a country called Estonia. Okay. They were started in 2013. They have 1, 2, 3 founders. Again, founders are individuals who own at least 10% of the company. I don't know why this thing is sticky. Founders are individuals who own at least 10% of the company. Give me a second here. It's sticking. Let me refresh my screen because it's sticking real bad. All right, here we go. All right, here we go. Founders are individuals who own at least 10% of the company. Currently, they have between 1,000 and 5,000 employees. They've raised $616,792,995 in funding, and they've gone through 11 rounds. So they're past the pre-seed round. They're in the 11th round of funding. Now they've raised over 600 million, almost 615 million dollars. They raised that from just 27 investors. Now, I need to explain something to you all. Investors are not the same as early investors. Okay, early investors, if you invest in a company at the pre-seed round, you are becoming one of the owners of the company. Like what we are at, we're in our pre-seed round, where if you invest in Cachet, you are becoming one of the owners of the company. If you don't purchase at least 10% of the company, you are not a founder. You're still one of the owners of the company, but you're not a founder. You're considered one of the principal shareholders. That's what we call principal shareholders. But you're not a founder, but you're not what's considered as an investor. Investors are those people who invest after the pre-seed round, accredited investors. So they only have 27 accredited investors. Now you can have 50 or 100, pre-seed round shareholders, and they all own a little piece of the company. Like here, if you want to invest that $36.62, you own 0.002441403.6% of the company. Okay, that's the percentage of the company you own, but you have 7,813 shares. Because once we exit the pre-seed round, we can create as many shares, as many stock shares as we want. There's no limit on how many stock shares that we can create. Now, generally speaking, most companies start off creating somewhere between 10 and 50 million shares or 100 million shares, but you can create as much as 1 billion or 2 billion or 3 billion shares. Okay, we'll probably start off with somewhere close to 50 to 100 million shares, and then as we start growing through the other investment round, we add more shares, we create more shares. But your percentage of what you own in the company stays that. So it doesn't really, so the shares only matter. It says you how many shares of the company you have as one of the owners, but your percentage of the company, that's what really matters, because as you're growing, the company's getting bigger and bigger. Your shares are worth more and more and more. But those people who own at least 10% of the company, those people are probably going to become billionaires. Okay? If you own at least 10% of the company. Now, individuals who own less than that, they'll make a hell of a lot of money on their investment, because 7,813 shares for $36.62. If we get to the point where we're doing at least shares go up and they come to be worth $49 a share, that means 7,813 shares times $49. That means at that, then your $36 investment, your $37 investment is now worth $382,837. So yeah, you make money. And you can sell those shares, you can leverage those shares, you can borrow against those shares, just whatever you want to do. So yes, you become very wealthy. Okay? Or somewhat wealthy. But those people who invest at least 10% are going to become probably going to become billionaires. Okay? Because if you get to the point to where you own at least 10% of the company, you're probably going to be a billionaire. Okay? Go back to our setup here. Okay. So after they exited the pre-seed round, they've gone through 11 unfunded rounds. They've gone through the series round, the series A, B, C, D, E, F. They've gone through 11 series of funding, and they only have 27 investors who invested after they came out of pre-seed. And they've raised over $600 million from just 27 investors: Dimer, Startup, Wise Guys, International Finance Corporation. Because look, once you prove to the SEC that you can raise at least $250,000, that is called the proving ground. So basically what we're doing is we're looking for people who can help us get to that $250,000 mark. Because once we get that $250,000 mark, what we're going to do then is we're going to take $80,000 to $100,000 and pay the software, the coders, to code the app. It's very expensive to code this type of app. We've actually been in contact with some of the coders, some of the same coders who coded Airbnb. And they gave us a quote of $80,000 to $100,000 to code the app the way we need it coded in order for us to be, have people come on and do all the stuff that we need to do and have the app to work properly. Okay, so that's why we need the 250K. We need to get the app coded. Once we get the 250K, we'll get the app coded. We'll launch the company, register in the state of Wyoming, register with the SEC. Go ahead and register the shares, all the shares that everybody has. They'll be registered with an equity management firm called EQ Vista. Okay, let's see if I can pull it up for you all right now. I want to go EQ Vista. It's a company called EQ Vista. And this is EQ Vista. Okay, EQ Vista is a company that they manage shares for startups, for companies, big and small. Okay, that's what they do. Okay, they manage shares. They do the valuation. They keep track of how fast the company is growing, how much money they've raised, what the shares are worth, all that type of stuff. So everything you all would need to know, you all as shareholders will be able to log on to our EQ Vista account, and you only pay like $1 per month to have access to the EQ Vista account, where you can go and you can pull up, and you'll be able to know what your shares are worth, how much they've grown, and how big the company has grown, how many employees do the company have, what's the valuation of the company. You'll be able to basically track the growth of the company and track the growth of your shares and the worth of your shares. Okay, so and that company is called EQ Vista. Is who we will register with after we raise that 250K. Okay, all right. So this company, but what I'm showing you all now is how all of these big investors, after you exit the pre-seed round, because that's the proving ground. The proving ground is the pre-seed round. That's where every company has to prove that they have the ability to raise capital. They have people who are putting their money in because they believe in the company. And so it has traction. So once you do that, then these other big companies, these big money, they literally start throwing money. They literally start throwing an ungodly amount of money at your company to push it to IPO. Okay. Click here to see what this company looks like. Pull up their website. This is Boat's website. And you can see they're basically an Uber and an Instacart, same thing as an Uber or an Instacart. No different. Rides, delivery, car sharing. I mean, it's no different. Okay. But yet still, they've raised over $600 million from just 27 investors. Okay. And they're exactly the same as an Uber, a Lyft, or an Instacart. It's an Uber, like the Uber Rides, the Uber Eats, and the Instacart. They're exactly the same thing. No different. Okay. But Cache Rentals, we will be the first of its kind in the commercial vehicle sector. No competition. There's nothing else out there like what we are proposing. So if companies are throwing this much money at something that's just like something else, then what do you think is going to happen when we launch Cache? Okay. All right. The next on the list is a company called Tier Mobility. Okay, Tier Mobility is a micro mobility firm that offers clients long-term ride-sharing options. They're based out of Germany. They started in 2018. They have 3 founders. Those are individuals who own at least 10% of the company. Now, they may have more people who own pieces of the company, but they have only 3 founders who own at least 10% of the company. They have at least 500 to 1,000 employees. They've raised $447,948,158 in just 6 rounds of funding. Okay, and they raised this from only 18 investors. So in other words, they came out of pre-seed. They've gone through their series A, B, C, D, E, and F. They've gone through their all the way through the F series, and they've raised so far almost $448 million from just 18 investors. You see how these companies start throwing money at these startups after you come out of after you've proven yourself in the pre-seed, after you've proven that you can raise a minimum of $250,000 during the pre-seed stage. This is why it's so important that we get to that 250 to get out of pre-seed, because once we get out of pre-seed, it's a wrap. Okay, show you what this company looks like. Change Mobility Good Together. In other words, it looks like they do the little e-bikes. They have people can go in, they can I guess put a quarter in or with a credit card and get the e-bike, and nothing real new here is and for that they have raised $447 million from 18 investors, and they're just in their 6th round. Okay. Let's go to the next one. A company called WIM. Okay. WIM is a mobility as a service provider that bundles all city transportation services into a single app for its customers. They're out of Finland. Remember, these are companies you never even heard of. They're in different countries, and they're raising all this money, and they're all pretty much the same. But they was able to prove that they could raise at least $250K in the pre-seed round. Okay, so they're out of Finland. 51 to 100 employees, 53 billion Deutschmarks, which is really like $56 million. It's like $56 million in US money. They've gone through 5 funding rounds. They have 2 founders, 2 individuals who own at least 10% of the company, and they have 12 investors. So they've raised almost $56 million from just 12 companies, from 12 investors. Mitsubishi Corporation, Business Finland, Desno, and another one. Click on here to see what they look like, what their site looks like. Mass Global. Taking a while for them to pull up. Wow. They don't even have enough. They raised all that money and their site is slow pulling up. That's amazing. That's amazing. All right. So we'll get back to them once they pull up. But they've got a site that's slow pulling up, but they've raised over $56 million. Yeah. All right. So as I said before, once you come out of the pre-seed stage, companies start throwing money at your startup. Okay, they start throwing money at your startup. I'm not even gonna wait for them to pull up. It's taking too long. There's always called DOT, D-O-T-T. Okay, small ride, big change. That's what DOT. DOT provides dockless shared electric scooters and bikes as short distance transportation options. Details of the startup: country out of the Netherlands. They came about in 2018. They have 2 founders. They have 51 to 100 employees. They've raised $140 million from just 4 funding rounds. So they're really just fresh out of startup by just 3 rounds. And in 4 funding rounds, they raised over $140 million, and they have 17 investors. Okay, take a look at their website, see what DOT has to offer, and see what they look like. Change Mobility for Good Together. App available on the Apple App Store and the Google Play. And they're pretty much the same thing as the other company that we were looking at, where they provide those e-bikes. We deliver. We believe in a pollution-free and designed for people, not cars. Okay, basically, people rent the e-bikes. That's it. They rent the e-bikes to get around, and for that, 17 investors have given them $140 million. Wow. Wow. Yeah. All right, let's go to the next one. Kareem. Everyday life made simple. Okay. I can tell they're out of the United Arab Emirates, Dubai. And they were started in 2012. And they have 4 founders who own at least 10% of the company. They have 1,000 to 5,000 employees. They have raised $771,700,000, almost $1 billion that they've raised in just 7 funding rounds outside of pre-seed. Okay. They have 22 investors. 22 investors have pumped in $771 million once this company came out of pre-seed. Let's take a look at them. See what they look like. Okay. Very generic type website. This is in, what you call it, Arabic or whatever it is. No, it's not. No, it's not. Okay, it's been translated because I got it translated to English. Okay, there it is. It's now translated. But one app, go anywhere, eat anytime, get anything, pay anyone. So they're kind of like a combination of, renting the rides, taxi, bikes, the rental car, social rides, food, dine out, groceries, it's kind of like an all-in-one app. You get on the app, you can pretty much get, just about whatever type of service, you want. All right. So, and they have raised, again, this company has raised what? $771 million. Companies you never heard of but now you don't have a chance to invest in them. Why? Because they're done with the pre-seed round. They're done with the pre-seed round, so you really don't have a chance to invest. Now, if any of you out there who are worth more than $1 million and you make at least $200,000 a year as a single person and $300,000 a year as a couple, then yeah, you can still invest in these companies because you're considered an accredited investor. But you must prove that by showing your tax returns and your bank statements for the last 3 years. Okay. All right, let's go to the next one. Cabify. I don't know what that says. It's in another language, but Cabify is a Latin American, Spanish, and Portuguese ride-sharing startup. Okay, they're in Spain, Madrid. They have this. They were started in 2011. They have 1, 2, 3, 4, 5 founders. 5 founders. They have 1,000 to 5,000 employees. They've raised in funding $477 million. Ungodly amount of money, people. They've gone through 9 rounds, and they raised this from just 25 investors. So 25 investors, after they came out of pre-seed, saw fit to just throw $477 million at this company to help it grow. Let's take a look at them. What does Cabify do? Let me translate this to English so you all can hold on. Just waiting for it to translate. There we go. More safety, higher quality, and a city within your reach. Become a driver and start making money. They're an Uber. they're a Spanish Uber and Lyft. Exact same thing as Uber, Lyft, InRide, hundreds of other ride shares. The exact same thing. Nothing new. The exact same thing as an Uber or Lyft. And Uber is in all these countries too, by the way. Lyft are in these countries. But they're the exact same thing, and still 25 investors have thrown $477 million into this startup, and there's nothing different than all types of competition, but they've still managed to raise $477 million in just 9 rounds from 25 investors. That's what I mean by if you can get your company out of the pre-seed round, it's almost like automatic. These big investors start throwing money at the company. They start throwing money at the company to help it to grow and become more successful. Because that's how they're going to make their money. Once the company grows and becomes successful and goes to the IPO stage, becomes public, or some huge buyout, that's how they make their money. Okay? Let's go to the next one. BlaBlaCar. Okay, BlaBlaCar. Click, grow together. Okay. So BlaBlaCar is a long-distance carpooling website that links drivers with empty seats and passengers to split the expense of travel. It's a carpool in France. That's what it is. It's carpooling in France. Come on, website. Y'all give me a minute. Let me refresh my site. Oh, here we go. Wow, pay $140 a month for internet, this high-speed internet, and it freezes up on me. Ain't that something? Let me refresh. Y'all give me a second. Let me refresh this. All right, here we go. All right, here we go. Where we at? We'll at BlaBlaCar, right? Yeah, BlaBlaCar. So they raised wow. BlaBlaCar, they're in France. They were started in 2006. They have 1, 2, 3 founders. They have 250 to 500 employees. They raised $563,534,130 in 7 rounds of funding. So 7 rounds outside of the pre-seed, and they only have 15 investors. And they raised that much money from 15 investors. $563 million. Okay. Let's take a look at what BlaBlaCar looks like. Wow. Okay, we want this in English. Give me a second here. There we go. English. Choose my language. And this is BlaBlaCar. Your pick of rides at low prices. Okay. Your pick of rides at low prices. No matter where you're going, by bus or carpool, find the perfect ride from our wide range of destinations and routes at low prices. Okay. So, yeah. Simple, right? Simple. Carpool, buses, you pick a ride and you go catch the ride. Like going to Caltrain or, the bus stop or whatever it may be, right? So it's, very simple stuff. And they've raised over $500 million. Simple. $500 million that they've raised from 15 investors. Bus Up, reinventing corporate commuting programs. Okay. Global commuter shuttle service provider with a groundbreaking solution that enables shared and flexible commuter shuttle programs. They're in Spain. They started in 2016. They have 1, 2, 3, 4 founders, number of employees, 51 to 100. They've raised $9,123,000 in funding. That's the lowest that we've seen so far. And they've gone through 5 rounds, and they have 6 investors. So each investor gave up almost $1 million. Each investor invested at least 6 investors. Each 6 investors have invested at least, on average, $800,000, $700,000 per investor. And they're in their early rounds. So yeah, they're on track to do good. But they raised over $9 million from just 6 investors. All right. Let me take a look at their website. Let y'all see what they look like. And this is Bus Up. We manage corporate mobility programs with technology, whatever that means. A service adaptable to all kinds of business, from exclusive routes for a single company, shared routes among different organizations, or door-to-door routes for big organizations. So basically, these are company, transportation for company employees. Okay. Hey, if it works for them, they've got $9 million, for that so far. Good for them. Vulog, leading tech provider for shared mobility solutions. Now, if a lot of these companies look like they're doing the same thing, because they are. Vulog creates technology that powers the world's most successful shared mobility enterprises. They're out of France. 2006 is when they were founded. They have 2 founders. They have 51 to 100 employees, about $56 million U.S. money, 53,100,000 Deutschmarks, about $56 million. And they're only going through 4 rounds of funding, just their 4th round of funding outside of pre-seed. And they have 7 investors. So they raised $53 million from just 7 investors. Wow. Let's see what they look like. Vlog, leading tech company. There they go. Scale your mobility business with Vlog. Fast, secure, profitable. Okay. With nearly 20 years of industry experience, hands-on experience, and a powerful, customizable tech platform, we're the partner you need to drive your mobility business to profitability. So basically, they offer, the software for companies that are starting some type of ride share. They have like the digital rentals, subscriptions, car sharing, vehicle gateway, mobility, and corporate. So they provide the software for companies that are doing some type of ride share, and they raised over $56 million from that, from just in just 4 rounds, and they have 7 investors. So they're doing pretty good. Now, this is a company called Grab. Now, I know about Grab because I've been doing some research. I'm telling you all, what you are about to see is going to literally blow your freaking mind. It really is. It is going to blow your mind what you are about to see right now. This is a company called Grab. Grab, making every day better. Grab is a mobile app that offers transportation, logistics, and banking services. They're out of Singapore, okay? China. They're out of Singapore. They was started in 2012. They have 2 founders. They have more than 10,000 employees. They've raised $12,147,750,000. Let me repeat that. They have raised $12,147,750,000 in 33 rounds of funding from just 54 investors. That means each investor had to put up on average $23 to $24 million a piece. I can't make this stuff up. I swear to God, I can't make this stuff up. When I tell you that there is an actual blueprint to creating wealth, this is it. Investing in startups. Because if you are one of the early investors, one of the pre-seed investors, you're getting in for pennies, less than a penny a share. That's what you're getting in for. And then once we hit that $250,000, then we get lumped into a pool of where these big investors take a look at your company. Why? Because you've proven that you're fundable. You've proven that you can raise the funds. You've proven your ability to raise capital, operating capital. You've created your app. You have something that they can go and look at, and all that has been created, and you've proven yourself. Now these companies just start throwing an ungodly amount of money at you. 54 investors, and they raised $12,147,750,000. Look at Grab. And this is Grab's website. Remind you of anything? Let's look at our website. Cache. Hold on. Look at Cache's website. Go back. Look at Grab's website. Okay. From essential services to earning opportunities, we're an all-in-one platform. Now, Cache is an earning opportunities platform too. We're connecting commercial vehicle owners with renters globally, enabling millions to easily, conveniently, and affordably rent the assets they need to become entrepreneurs and business owners. $12 billion this company has raised. $12 billion. Consumer, driver, merchant, Enterprise. They do delivery, Mart, Express, Rides. They have a secure and seamless cash payments online and in store. Insurance, they do insurance. They make money from insurance, just like we're gonna be making money from insurance. We're gonna be making money from all these other services that are associated with renting these vehicles. When I tell you we are onto something, that's what I mean. All right, $12 billion that they've raised. You think they're pre-seed? Do you all think their pre-seed investors are happy? Do you think they're happy? Okay. I mean, if you're watching, give me some comments here. Let me know what y'all think about this. Give me some comments. Let me know what y'all think about this. I mean, this is crazy. Number 11, Wunder Mobility. Wunder Mobility, whatever it is. Technology to define the future of sustainable mobility. All right. What does Wunder offer? Wunder Mobility is a technology and services platform that helps businesses in towns all over the world establish and grow new mobility initiatives. They're out of Germany. Founded in 2014. They have two founders. They have 101 to 250 employees. They've raised over $70 million. They've gone through 5 funding rounds, and they have 25 investors. Wunder, this is their app. To be honest with you, it looks like a Uber. Most customizable platform for profitable shared mobility services. Yeah, something like an Uber. Nothing new. And they raised all this money for something that's exactly the same thing as Uber. $70 million in 5 rounds, and they have 25 investors. SoCar Malaysia. Drive. Okay. SoCar is a car sharing network in Malaysia. Founded in 2017. They have 101 to 250 employees. They raised $18 million in funding, and they're in their first funding round. In other words, they literally just came out of pre-seed. Whatever they raised in their pre-seed, we know that they raised it at least $250K, because you got to raise at least that much in order to be listed, in order to get presented to register on the SEC and register for these investors to start taking a look at your company. So they came out of pre-seed, literally just recently came out of pre-seed. They're in their first round after pre-seed, their very first series round. And in the very first series round after pre-seed, they only have 2 investors, $18 million. So on average, $9 million per investor. Or one investor did, $10 million, the other one did 8, or one investor did $12 million, the other one did 6 or 7, or whatever the case may be. But they only have 2 investors, and they've already raised $18 million in just their first round. Wow. Let's take a look at their company, see what it looks like. SoCar. What does SoCar look like? Car Rental Malaysia. Time to say goodbye to car ownership. Drive, whatever RM6 an hour, whatever that means. Any car, anywhere. They're like a corporate Turo. So, I mean, they're a rental car company. I mean, nothing new. Nothing new. And they're making money. Nothing new. And they've got these companies that are literally throwing money at them, ungodly amount of money these companies are throwing at these startups after they come out of pre-seed. Okay, you see how important it is to get out of pre-seed, to raise that $250K. Hitch, I can't even pronounce it. Drive with the Ferris partner. Okay, sounds good to me. Hitch is a ride-sharing app that caters to late-night commuters by providing an alternative to taxi. So it's a after-hours Uber, and they're in France. 2013 is when they were founded. They have 1, 2, 3 founders. Number of employees, 101 to 250. They've raised 75,250. I'm sorry, they've raised 75 million. Let me repeat that. They've raised $75,250,000 in 6 rounds of funding, and they only have 10 investors. Again, ungodly amount of money being thrown at these companies after they come out of pre-seed. Okay, this is what Hitch looks like. Let me translate to English. So, Drive on Hitch profitable app is basically a late night Uber, and after hours Uber. You go out, you get drunk, and you call these people up. They come take you home. Right? That's what it is. They're an after hours Uber. You list your car, you can go and pick, you sign up to go pick up drunk people. Right? That's what I'm thinking. You're signing up to go pick up, drunk people after hours. They partying at the clubs all night. They done got drunk and plastered. They can't find their keys. They can't even put the keys in the door. So they go on their app. They call you and you go pick them up, take them home. All right. So that's what Hitch is. Okay, that sounds good to me. They've raised $75 million. Okay, out of 6 rounds after pre-seed, and they have 10 investors. Good for them. Ducket, okay. Dock Lock Charge. Oh, it's one of these scooter. Oh, it's a scooter thing. Estonia. They're out of Estonia. They started in 2019. They have 3 founders. They have 1 to 10 employees. They've raised 800,000 Deutschmarks, which is about 1.2 to 1.5 million dollars. They're in their second funding round, so they just really started, and they only have 2 investors. So they raised about 1.2, 1.5 million out of, and they're in the second round out of pre-seed, and they've raised, and they have that from 2 investors for people to rent some scooters. Oh, look, their website don't even pull up. Wow. All that money and the website don't pull up. Ain't that something? Okay, so yeah, they got that money. Whatever they are, I can't look at them, but guess what? They got some money. They raised 1.2 to 1.5 million dollars with 2 rounds and just 2 investors. Okay, good for them. Bakia, Pakistan's leading hyperlogical marketplace. Bakia. Okay, Bakia is a social impact app that saves clients time and money by providing instant transport and courier services. Mr. Person says, hey, this is some great information. You telling me, look, when I learned this stuff, I was like, oh my God. So this is literally how you become wealthy. This is literally how pre-seed investors, early investors become wealthy. Because once a company gets out of that pre-seed round, look, help us to raise that 250K. Help us get to the 250K, and then we're in a position to court these same type of people. These investors start looking at us and start throwing money at our company to help us grow, build, become more profitable. Your shares, stock prices go up, and this is how you become. This is why wealthy people invest in startups. Okay. Let's look at their company. See what they look like. Verify and take a few seconds. Bakia.com. Verify you're human. Yeah, I'm human. Successful. Bakia. See what their site looks like. Come on, Bakia. Here we go. Bakia. All right, Bakia is your everyday, everything platform. From helping you reach anywhere in the city at the lowest rates in town to getting anything delivered to anyone, anywhere in the city. Bakia can do it. So they're in Uber and a Instacart. Same thing. Again, nothing different. Nothing different. They're the same thing as everything else that's out there, and these companies are see how much money that they raised. Okay, they're out of Pakistan, 2016. They have one founder. They have 101 to 250 employees, and they've raised $18 million, $18,700,000 in 2 rounds from 3 investors. Again, these are rideshare startups you all didn't know anything about, and they're bringing in millions of dollars. I mean, these investors are throwing crazy money at these ride shares once they come out of the pre-seed round. Just crazy. 18,700,000 in just the second round. So they literally just came out of pre-seed. They go through the series round, and now they've hit their Series A round, and they only have 3 investors, and they've raised $18 million from 3 investors. Yeah, they're gonna make some money. That's by Kia. And they're basically the same thing as an Uber or an Instacart. The exact same thing. The exact same thing. No different. Okay. Let's go on to the next one. The next one is number 16, Trophy. It's too little to read. I can't read that. Trophy is a mobility as a service platform that helps communities and businesses achieve their objectives by providing shared transportation solutions. So in other words, a carpool or an Uber. Same thing. Again, same thing. Lithuania. 2013 is when it was founded. They have 1, 2, 3, 4 founders, 51 to 100 employees. They've raised $14 million in 4 rounds and just have 7 investors. So 7 investors. They've already raised $14 million. And this is their app right here. Connect your city's mobility, build with Trafi today. Same thing is like just about any other, rideshare app. Who's next? Beat, B-E-A-T. Beat, our priority, your safety. Okay. Beat gives consumers a fresh transportation experience by connecting them in real time with nearby available drivers. It's an Uber, people, a Lyft, InRide. They're in Greece, 2011, founded. They have 1, 2, 3, 4 founders. Number of employees, 251 to 500. They've raised $6,870,000 in just 4 rounds from 3 investors. Let's check out their site. Can't even get to their site. Wow. $6 million and you can't even get to their site. $6 million and can't even get to their site. Ain't that crazy? Web chat live. Remember to guard your privacy. Okay, yeah. $6 million and can't even get to their site. Okay. Wow. Green Scooters. Hola, Mexico. Green Scooters is a Latin American micromobility firm that combined with Yellow to form Grow Mobility. They're out of Mexico. 2018 is when they were founded. They have 1, 2, 3, 4, 5, 6 founders, 101 to 250 employees. They've raised $72,652,616 in funding in 5 rounds, and they have 18 investors. That's pretty good. Take a look at them. Website expired. They didn't raise $18 million and they couldn't even pay for their website. This account has expired. If you are the site owner, click below to log in. Well, they did say that they combined with another company, so they probably got combined with the other company. What's the other company they combined with? They combined with a company called Yellow. So we'll probably see Yellow further down, and then maybe we'll be able to get on their website. But we know that they raised $72 million, and their website has expired. So they probably Yellow is now probably their main site. Okay, so Timbice, they're out of Brazil, is a bike sharing firm based in Brazil. Started in 2012. They have two founders. They have 501 to 1,000 employees. They raised $62 million in just 2 rounds. So they're literally just out of pre-seed. They're in their second round, and they raised $62 million from 4 investors. Let's take a look at them. What they look like. Translate to English. Here again, it looks like one of those e-bike apps where you can rent an e-bike. It starts from Bisa. Yeah. A role. It's a new habit, a new relationship with the cities. Okay. Reinvent mobility, thought for everyone. Rediscover your city from a new perspective. Yeah. It's one of these e-bikes, just like the other company that we saw. They had the e-bike. They're in San Pablo, New York, Slovenia, and Argentina. So yeah, it's an e-bike. They rent the bikes. Okay, they rent the bikes, and people can go and rent the bikes, and for that, four investors have thrown $62 million at this company in just their second round. 4 investors in just their second round have thrown $62 million. Man, I'm telling you, boy, look, Cache Reynolds looking pretty good right about now. The Cache Reynolds, look, people help us to get out of pre-seed. Okay. For you helping us to get out of pre-seeds, you're going to be in a position to become very wealthy. All right, here we go. Yellow. Remember that the other company that got bought out? Here they are, Yellow. All right. So Yellow is an online micromobility platform that allows users to rent bikes. Again, bikes and e-scooters, nothing different. They're out of Brazil. 2017, they have 1, 2, 3 founders, 501 to 1,000 employees. They've raised $125,300,000 in 4 rounds of what's called. So the 2 rounds, and then they got with this company and went through more 2 rounds, and now they have 7 investors, and they raised $125 million. And now let's see if their see if their site works. Yes. Okay. Yeah. So the other company that we were looking at, they got that combined with this company, and they rent e-bikes and scooters. Again, e-bikes and scooters. This is the site, but taking a while for it to pull up. Well, I know this is not all I'm going to get. Is just the placement marker here for the $100 and some odd million. This is all that's all y'all have. That's kind of crazy. Okay, so okay, that's Yellow. All right, 125 million, and try it again. That's the site. Yellow.app. Maybe you have to go on to your phone and pull it up or something. Some of y'all try to see what happens. It's Yellow.app. Y'all go to Yellow.app and see if you can pull it up on your phone, because on the computer, that's all I get, for $125 million. Wow. Okay. Like I said, get out of pre-seed, companies start throwing money at you. SWAT Mobility. Revolutionizing how the world moves. A tech business established in Singapore that specializes in demand responsive shared transportation, making commuting easier for everyone. Singapore, 2015 is when they were founded. They have 1, 2, 3, 4 founders. Those owners that own at least 10% of the company. They have 51 to 100 employees. They raised $12,263,720. They're going through 4 rounds of funding, and they only have 8 investors. So they're doing pretty good. Just 8 investors. With that kind of money, that's pretty good. And empowering the world to move more with less. Schedule a demo. Driving efficiency and sustainability in every mile for logistics and mobility businesses. So they're kind of like a logistics company for what would seem like to be like trucking or commercial vehicles or something like that. Empowering business growth. Smart mobility. Okay. That's pretty good. They raised some money. Brian in Brazil. Brian creates a carpooling platform for individuals and businesses. Again, nothing new. Another carpooling company out of Brazil, 2014 founded, 1, 2, 3 founders, 1 to 10 employees. They raised, there's like one RS1. I'm not even sure what that is. Let me copy and paste that in Google and see what that comes out to be in US dollars. Y'all give me a minute. Try to find out what this is. What this is. What that is. Let me see to USD. RS 185 USD. Okay. Currencies. Okay, so to US dollars. Oh, that's pretty good. No. All right. So they raised 2,350. So they haven't raised very much money yet. From what I'm seeing. What was that? RF 185, 1,185, 1,185. All right, let's try that. So let's say 1,185,000 to US. Now, let's search that. See what that says. I can't even get a reading on what this is, to be honest with you. It's not even. Okay, I don't know what that is. I'm thinking it's probably like 1 million and some odd dollars. Don't quote me on that because I'm not really certain. But they only have 1 investor, and they've gone through and they're just in their first round. So it may be whatever the R 1,185,000. It may be 185,000 US money. In my opinion, when you see stuff like that, it's usually it's probably like $185,000 or I don't know, it could be $1 million. I don't know, but they only have 1 investor, so whatever it is, it's pretty good. They're in their first round, and they have 1 investor. They literally just came out of the pre-seed round, and they have 1 investor, and that 1 investor is giving them looks like a good amount of money, and they're basically a carpool or a Uber or something like that. They're basically a carpooling company. Yeah. Basically that's what they are. But they're raising money. Okay. Ole. It's an Indian mobility platform and ride-hailing firm. India is where they're out of. 2010. They have 2 founders, 5,000 to 10,000 employees. They raised 3. Wow. Okay. They have raised $3,808,672,049 in 25 rounds, and they only have 45 investors. Okay. $3 billion from just 45 investors. Yeah, the yellow isn't pulling up. So they raised all that money, and I don't know what they're doing. Maybe they're reconstructing their site. They got enough money to do it. Maybe they're reconstructing their site. Introducing the all-new S1X, moving people and the world. Check the all-new design, gorgeous, and whatever. What are they selling? I mean, it's a freaking scooter. Oh, it's a scooter. Okay, global mobility, ecosystem driving communities forward. They raised $3 billion. There's an Uli ride for everyone. It sounds like they're one of these electric car companies, kind of like what Elon Musk have. The electric cars for riders. A constantly experiment to come up with an industry first features for our riders that eventually become a norm. Well, no, for drivers. No, they're in Uber. For drivers, the real-time stats, yeah, they're in Uber. They're in Uber or Lyft. Exact same thing, and they raised over $3 billion. Oh, my God. This is literally just another Uber or a Lyft, and they raised almost $4 billion. I mean, can you all believe that? From 45 investors. $4 billion from 40. When I tell you these big money investors start throwing money at these companies that come out of pre-seed, and they're not doing anything different than the Uber, the Lyft, all this competition within that industry, and they threw $3 billion at this company. And here we are getting ready to bring to the commercial vehicle industry the first of its kind, the first, the only, no competition. Is there any doubt that once we come out of the pre-seed round, that Cache Rentals is going to be successful? We just need to get to that 250K. Because I have no doubt that it's going to be successful, because $3 billion for another Uber in India. Wow. Almost $4 billion from just 45 investors. Okay, Blue Smart Mobility. Okay. Blue Smart is an electric vehicle fast charging network and a zero emissions ride hailing service. Okay, it's an electric Uber. They're in India again. 2019 when they launched. They have two founders, 5,100 employees, 17 million, 62,000. They're going through 5 rounds, and they have 20. They have 20 investors. And see what they look like. They have 20 investors. So what do they look like? Okay, yeah, they got a bunch of they're like an electric rides, city rides, rental rides, airport rides, helping your business move forward sustainably. Wow. Okay. $17 million from 20 investors in just their 5th round. Okay, Yulu. Yulu, moving India towards a sustainable future. Yulu is a micro-mobility platform in India that uses shared electric two-wheelers to alleviate traffic congestion and population. They're in India, 2017. They have 1, 2, 3, 4, founders, 101 to 250 employees. They raised $19,900,000 in just 4 rounds from 7 investors. Take a look at what they have. Another one of these, another e-bike company. We've seen about 4 or 5 of them already. Here it is, another e-bike company. Same thing as the other ones that we've seen. Okay, and even though they're the same as the other ones that we've seen, they raised $19,900,000 in just 4 rounds from just 7 investors. So they're on track to do some big things. Okay, but they're no different from the other 5 or 6 that saw that were just like it. E-Bike Go. Here again, another e-bike company in India. I mean, come on, you got in the same country. We've seen 3 companies that pretty much exactly the same thing in the same country, but they're all getting major money from investors. India, 2019, 1, 2, 3. Founders, 51 to 100 employees. They raised $2.2 million in just 3 rounds from just 10 investors. Okay, I mean, look, same thing. It looks nice. I like that. Okay, so there you go. Some nice little e-bikes there. Little George Jetson type deal. Okay, yeah, I like that. Accelerated mobility. Okay, so they raised money. They raised $2.2 million in just 3 rounds, and they have 10 investors. Wow. On Bikes, self-ride bike rentals now start at, what's that? Whatever, 8 something an hour. Again, in India, we're a micromobility platform that makes first and last mile transit easier. 2015, 101 to 250 employees. They raised $791,935, just under $1 million from in the 3rd round. They have 9 investors. 9 investors. See what they look like. Waiting for the site to pull up. Here we go. Navigate the city on your own terms. I like that. Subscribe to Owns Monthly Rentals, or there's a little monthly rental thing. You rent the e-bikes. All right. Another e-bike company, another e-bike rental company in India, another one, and they have raised almost $1 million from 9 investors in just 3 rounds. So they're doing decent. Here's another one. Quick Ride. A quick ride, yeah. Share your daily commute with Carpool and Bike Pool. Again, a carpool company in India. 2014, 1 founder, 11 to 50 employees. They raised $14,300,000 in just 2 rounds of funding. And number of investors, they have 3 investors. Oh, Sequoia Capital. What? I'm a Sequoia lending. I'm actually a Sequoia lending rep. They do commercial loans. Wow. Sequoia threw some money in this. Okay. So Sequoia got money though, so they can do that. Quick Rides. Best taxi, best fare. Yeah, it's an Uber. It's an Uber. Or something of a sort, or a taxi, something, our fleet for airport taxis and things like that. So it's pretty good. So there you have it. Okay, so they raised some money, $14 million in just 2 rounds. So they really just fresh out of their startup, out of their pre-seed. Zip, whatever they call it here. Zip is an e-scooter riding and rental platform businesses with last mile. Again, another e-bike ride company out of India. 2017, 51 to 100 employees, $2,500,000 what they raised in 3 rounds from 6 investors, and what they look like. Here's their website. Okay. Wow. Deliveries, India's largest tech-enabled EV as a service platform. Okay. Look like they use these little bikes to deliver food and other types of stuff. So, no, nothing new. They raised quite a bit of money. Wicked Ride. Looks like all these other ones are coming out of India. Motor vehicle sharing on a peer-to-peer basis. And Uber. India started in 2014. They have 1, 2, 3 founders, 101 to 250 employees. They raised $24,444,940 in just 5 rounds, and they have 6 investors. Again, Sequoia Capital is one of their investors, company that I'm a commercial loan consultant with. Wow. Okay. Go ahead, Sequoia. Put your money in there. Okay, so that's their site. That looks very cheap. Wow. That's their site? I'm not even sure what this is. Okay. I don't know if that's their site or not, but they need to check on that. $24 million? No for that. Okay. Didi out of China. Didi is a mobile platform that provides transportation services via an app. Out of China, 2012. They have 2 founders. Wow. They have 5,000, 10,000 employees, and they have raised $23 billion. Okay. Look, y'all, I'm not making these numbers up. This is not my website. This is stuff that I pulled up. And these are companies that out there that are doing these ride share startups. And this company has gone through 24 rounds, and they have 43 investors, and they have raised $23 billion. Let me repeat that with the B. $23 billion. $246,700,000. Do you think their early investors are happy? Do you think all of their early investors are multimillionaires and a few of them are even billionaires? Because I can guarantee you, if they've raised that much money in funding, you can imagine what type of revenue they are generating. Remember, these numbers is just what they're raising in funding. These are not their numbers of what they're generating in revenue. Help us to get out of pre-seed. Help us to hit that 250K so we can get out of pre-seed. We do that, and I promise you, I promise you, all your problems will probably just go away. More than a journey. Wow. I would imagine so with $23 billion. Did I automate this autonomous driving plans to introduce what I couldn't even finish reading the doggone thing. It looks like there's some type of autonomous driving. Did I express? Hold on here. To offer more efficient, economical, and comfortable transportation services with quick response and affordable prices. Wow. Excuse me. They have raised a lot of money. They have raised $23 billion, $246,700,000 in 24 rounds of funding from just 43 investors. Yeah. Okay. OFO is a bike sharing platform that operates entirely online and through a mobile app. That operates entirely online and through a mobile app. They're out of China, 2014. They have 1, 2, 3, 4, 5 founders. They have 1,000 to 5,000 employees, and they have raised $2,151,223,992 in just 9 rounds of funding from just 23 investors. Alibaba, y'all know Alibaba. I order some products through them from Alibaba. Is one of their investors. Look, people, we just need to get out of pre-seed. Waiting for OFO to pull up. Look, help us to raise that capital we need to get out of pre-seed, to get this app built, and to get listed with the SEC and with EQ Vista, so we can start growing cachet and start, getting some of this accredited investor funds that these people throw at these companies once they come out of pre-seed. Whatever this company is, it's taking them a long time to pull up their website. I'm gonna leave it up and running, but we do know that they've raised over $2 billion from just 23 investors, and they're just in their 9th round of funding. 9th round outside of pre-seed. Okay, I'm gonna just leave that up. That's a lot of money. Hello Trans Tech. Okay, out of China. Hello Trans Tech, previously Hello Bike, is a Chinese company that creates smart sharing bikes for short distance travelers. Out of China, 2016, 1, 2, 3, 4 founders, 1,000 to 5,000 employees, 1 billion, again, another $1 billion fund. Oh my God, $1,754,944,610 in just 7 rounds from just 7 investors. From just 7 investors, and their site don't even work. Ain't that something? Oh wow. I can't make this up. Okay, Chio KOKO Chungs, I don't know if I'm saying that right, is a vehicle sharing firm based in China. They're an Uber. One founder, 500 to 1,000, 1 billion yens. It looks like 1 billion yens is probably a little more than $1 billion in U.S. money. Funding round 1. And oh my, that's from one freaking investor? Hold on, let me check that numbers. Let me check this numbers. That's from one investor? That's from one investor? So in U.S. money, that is 1,389,931,091. $1.3 billion from $1.3 billion from one investor, and they're just in their first round out of pre-seed. This company is going to raise some serious money. They raised one investor, whatever this Jiajing Gidi Holding Group, threw $1.3 billion at this company. And we can't even pull up their website. We try it again. Okay, we got something. Okay, we got something. Let me translate. All right. $1.3 billion for an Uber. It's basically an Uber. I tried to translate it, but it didn't translate. One investor through $1.3 billion is to what equates to an Uber or a Lyft. in China. Okay. T3 Mobile Services. Company profile. T3 Mobile Services provides renewable energy powered car sharing services. China, again, 2019, when they launched, 251 to 500 employees. Oh my God, I don't even want to look at this, because if that was 1.3 billion, this is 9,760,000,000. That's probably about. This is from 6 investors, and they're in their first round, and that's got to be more than $13 billion. Because if that was 1.3 billion, this has got to be like 13 to 15 billion dollars that they raised in their first round from just 6 investors. Let's see what their company looks like. Okay, I'm doing a translate. See if this one will translate. It's not really translated. All right, there we go. I got something. Company profile. T Travel is an intelligent travel ecological platform built in Nanjing, leading technology company initiated by China's first automobile group company, Ltd. The company to become the most trusted travel service enterprise as a brand vision, science, and technology lead. I don't even understand half the stuff they're even talking about here. T3 to travel, recruiting the driver recruitment. It's like again, Uber. I guess when you recruit a driver to come pick you up and take you somewhere. Wow. Ride sharing, people. Almost $15 billion from 6 investors. That's crazy. That's crazy. Bird, bike share, another bike share company. Bird creates vehicle sharing network that offers low cost transportation to communities all around the world. They're in the United States. They're out of the United States, California. 2017, they have 1 founder, 500 to 1,000 employees, $623 million that they've raised in just 9 rounds from just 32 investors. Sequoia Capital is one of them. I mean, people throwing that kind of money into an e-bike, into e-bikes rentals. All right, people. 623 million, 9 rounds. 9 rounds of funding, 32 investors. Ativa is a company that makes software that recognizes emotions by analyzing minor facial and speech cues. Oh, this is one of those facial recognition type things. United States, 2009, they have 2 founders, 51 to 100 employees. They raised $62,550,000. They're going through 7 rounds. They have 17 investors. You know, they're one of those highly tech companies, that's, facial recognition type company. So, yeah. All right. People throwing some money into that. Now, again, none of these companies, none of us can invest in these if we're not worth at least $1 million, or we earn at least $200,000 a year as a single person, or more than $300,000 a year as a married couple, because all these companies have exited the pre-seed round. So you miss your opportunity to become an early investor in these companies. Only people that got money can invest in these companies now. Cache, by the way, is still in the pre-seed round. So you all still have an opportunity to become an early investor in Cache. Let me give you all the link to Cache if you want to become an early investor. I'm going to be sharing the link with you all here pretty soon. A company called Lime. Lime makes it possible for individuals to get around their cities in a cost-effective and convenient manner, reducing their carbon footprint. They're out of San Francisco, California. 2017 is when they were founded. 1, 2, 3, 4, 5, 6. They have 6 founders, 500 to 1,000 employees. They've raised just under $1 billion, $945 million. They've gone through 13 rounds, and they got this from just 50 investors. An e-bike company, e-bike rentals. They raised almost $1 billion for, oh my God, almost $1 billion from 50 investors, 13 rounds. All right, I'm going to stop right here because the rest of these you all can go and look up, but they're basically, I mean, look, this is crazy. This is crazy. Let me stop sharing here for a second. All right, look. What we need is early investors to help us get out of the pre-seed round. As you all can see, if we can get out of pre-seed and get Cache to the next round, minimum $250K. We pay for the app. We pay for marketing to bring hosts in on the app. And then we have accredited investors that we're exposed to. And from what I've seen, they start throwing money at companies once they come out of pre-seed, especially in this ride share sector. Okay. I'm going to give you all, this is our website that you all can go to become an early investor. Look, this speaks for itself. It really speaks for itself. Cache is a great business model. Let me go back and share my screen again. It is a great business model. It is, I mean, look, this is a great business model. For one thing, we'll be the only ride-sharing global mobile application in the commercial vehicle sector. And when we say commercial vehicle, we're not just talking about semi-trucks. Is this going to change the trucking industry? Oh, yes, it is. Is it going to change? It's going to help more people to become entrepreneurs and get the stuff they need easily and quickly. Let's think about it for a second. Food trucks on average earn somewhere between $600 and $2,000 plus per day. And if you wanted to start your own food truck, business, you have to go out and buy a food truck. You have to buy the food truck with all the equipment in it and all that type of stuff. You're going to spend probably about $60,000 to $80,000. A lot of people don't have that kind of money. But there are a ton of people out there who have food trucks that they're not doing anything with. So we will have an app where people like that can list their food trucks onto our app for other people to come on and rent what they need to become entrepreneurs. If they're paying, if someone is renting their food truck for $1,500 a week or $2,000 a week, and you're doing $1,000 a day or $2,000 a day in revenue, would that be preferable to you going out trying to get a loan for $60,000 or $70,000 for a food truck and starting your business, or spending that much money? It'd be a lot easier to rent that. Same thing with semi trucks. Same thing with box trucks. Same thing with sprinter vans. Same thing with delivery vans. Same thing with cargo vans. Same thing with food trucks. Same thing with motorhomes. Same thing with RVs. Same thing with boats. Think about somebody who is a great fisherman. They know all about these deep sea fishing, and they want to start their own fishing charter. Crabbing, fishing. These big fishing boats that go out, but they don't have $200,000 to $300,000 to spend on a fishing boat and all the equipment, but they can rent one from somebody and probably make. I'm not sure what those type of companies make, but they go out there fishing charters and they're bringing back loads that are making them hundreds of $1,000s on one load of fish that they're bringing in. So you see what I'm saying? This is what Cache is. Cache is not just for trucks. It's for every type of commercial vehicle out there. Buses, vans, delivery vans, semi-trucks, box trucks, pickup trucks, construction vehicles and equipment, limousines, utility vehicles, tractors, trailers, food trucks, motorhomes, marine vessels, private jets, planes, helicopters, and more. All right. If you want to get involved and become an early investor, we just need you all to help us get to $250,000. Because as you've seen, once we get to that level, then we qualify to register with the SEC. We qualify to register with EQ Vista and to be put in front of these accredited investors. We need to get to that benchmark so that we can get in front of those accredited investors. And those accredited investors, they are literally, as you all see, they are literally throwing ungodly amount of money at these companies to push them to IPO, to help them go, to help them build, to help them expand, become more profitable. The numbers that we were looking at was just the money that they raised in funding. That does not include the amount of money that they're bringing in revenue. That was just the amount of money that the funding that these accredited investors are throwing at them because they have exited pre-seed and they've proven that they can raise at least $250,000 in capital. This is Grab, one of the ones that's raised over $13 billion, almost $13 billion. I don't see much difference in the quality of what they have and what we have. Let me just go back and forth. Grab, Cache. Grab, Cache. Grab, Cache. And we have no competition. Grab has all kinds of competition. They're the same thing as an Uber. They're the same thing as a Lyft. They're the same thing as an Instacart. They're the same. Us, no competition in the commercial vehicle sector. All right. If you want to become an investor, click on becoming an early investor. And you come over and choose what investment option is right for you. Now, if you're asking, can you invest more later on? You can, as long as we're still in the pre-seed. But I'm telling you, once we hit $250,000, we're exiting the pre-seed and we're moving on to the next series round because we really want to get in front of those accredited investors. So that's where the money gets crazy. Okay. So as long as we haven't exited the pre-seed, as long as you do it before we raise that $250K, and we haven't exited the pre-seed round, non-accredited investors can still, you can invest more. You can, you start off with $36, you can up it to do $36 more, you can up to the 73 or to the 146 or to the 500 or 2,000, 5,000, whatever the case may be. You can up your butt. All I can tell you is this: one good, decent investor could get us to our $250K, because the investment levels here we're allowed to take as much as $300,000 from one investor. We can't, anything over $300,000 has to come from an accredited investor. Okay, that's why I say it's investments greater than $1 million. Contact Cache Founder. You have to contact us, and then we have to we have to make sure that they are an accredited investor, and then we can then accept their money through a bank, through some type of wire and transfer. But up to $300,000, you can click on the option and you can do it right here through Stripe, through our Stripe account. Okay, you can do it right here through our Stripe account up to $300,000. Okay, but we have the different, in case you're wondering, $300,000 makes you a founder, because that would give you 20% of the company with 64 million shares. Anticipated portfolio value in 3 to 5 years, $3.1 to $6.2 billion. If you got that kind of money. But there's others, 150,000, 75,000, $37,000, $18,000 level, $9,300 level, the $4,600 level, $2,300 level. These get you significant shares. 1 million shares for $4,687. Okay. $585 level, $1,100 level. These are all the different investment options that we have with our equity crowd fund. Okay, and you just come to become an early investor. Go through here, see which investment level you can afford, what's right for you. You click on it, and it takes you right over to it, and you can take care of it right here on the site. You take care of it, pay it right there on the site, and within 48 hours, you will receive your SAFE agreement, okay, which is your future equity, okay, your simple agreement for future equity. That's what SAFE stands for. Within 48 hours, you'll receive that from our investor relations team, Miss Miranda Johnson, I think is her name. She will send that to you, and that will be coming from investor-relations@mycache.com. You get that within 48 hours. And each time you purchase shares, you'll get an updated SAFE agreement. Once we raise the $250,000, once we raise the $250,000, we will then register the company. We register the company as an LLC in the state of Wyoming. We will register with the SEC. All the shares that people have purchased will be registered with a company called EQ Vista. EQ Vista, yeah, this company called EQ Vista. Okay, get your company's valuations performed by EQ Vista, one of the leading 409A valuation providers. This company will keep track of all the money that we're raising from the other series round. They'll keep track of the growth of the company, what the stock value is worth, your shares, all that. Each of our shareholders, our owners of the company, because when you invest during the pre-seed round, you become one of the owners of the company. You get a percentage of ownership of the company. Now, you're only listed as a founder if you own at least 10% of the company. But any of the other levels you invest in still gets you a percentage of the company. You're just not a founder. You're what's called a principal shareholder. Okay? 10% owners of the company have voting rights. The other owners of the company don't have voting rights. Okay, that's the difference. Okay. After that, and we close the pre-seed round after we do that, and you all can't get any more shares if you're not an accredited investor. That's not my rule. That's the SEC rule. Okay. So please, all of you who are sitting at home thinking about this, and you say to yourself, well, I'm thinking about it, and we close the pre-seed round, please don't come and ask me, can you get shares? Because I can't do it. It's not up to me. I can't do it. You have to be an accredited investor after that point to get shares. You have to be an accredited investor. So if you miss it, you miss it. Okay, I mean, and that's fine, you know, but just don't, blame me or call me, or sell out or all this other stuff that people like to do, when they miss something. And I've been sharing it and telling people about it and trying to get people involved and letting the people know about it, telling them what we're going to do, and you don't do it, and then, we move on. And, I'm just saying, do we need your help getting to 250K? Yes, we do. I can't tell you how much we've raised so far. That's against the rules. The SEC does not permit us founders to use the amount of money that we raise to influence early investors. We can't do that. That breaks the rules. All I can tell you is this: you need to get in as quickly as possible. If you're gonna get in, get in. If you get in at the $36 level, at least you're in. Get in at the $100 level, you're in. Get in at the $5,000 level, you're in. Okay? And if we get a big investor and we close this thing tomorrow, you're in. Okay? You're in. But you need to get in. Because after the pre-seed round, we cannot accept your money unless you can prove through your last 2 years tax returns that you earn at least $200,000 a year as a single person or $300,000 a year as a couple. And you must show your bank statements to prove that you're on track to earn that in the current year. That shows that you have a net worth. You must show that you have a net worth. That means your house, cars, whatever the assets you own, IRAs, all that stuff. You have to show that you have a net worth of at least $1 million to invest after the pre-seed round. That is not my rule. This is why the rich and the wealthy keeps getting wealthier, because they are allowed to invest in opportunities like this beyond the pre-seed round, and everyone else keeps standing still because most founders don't publicize or let people know that, hey, did you all know about Lyft? Did you all know about Airbnb when they was in their pre-seed round? No. Did you know about some of these other things? No. I'm gonna give you one that I missed out on. I had an opportunity. I had an opportunity to invest in Zephyr Hills Water. Okay, I'm 89. Let me start sharing my screen here for a second. I'm gonna show y'all something. I had an opportunity to invest in Zephyr Hills Water back in 1989. Let me pull this up for you all. 1989. I had an opportunity to invest in Zephyr Hills Water. Okay. I'm 89. I had got hurt. I'm in the military. I was in the military. I got hurt. And I got a bunch of money. Okay. I got $45,000. I got $45,000. I'm going to have to call Red back. Red, I'm going to have to call you back. Okay. I got $45,000 when I got hurt in the military. I was doing land nav, night land navs, and I just told him I'm gonna have to call him back. Y'all give me a second. Red, I'm gonna have to call you back. I'm doing a live. All right. So I got $45,000 when I got hurt. We were doing night land navs, and me and a couple other guys walked off a cliff. Yeah, got some injuries and stuff. So I got $45,000, and and I was still on reserve duty status. But I got $45,000, and I transferred to Fort Sam Houston, Texas, where my then wife was a Army captain, and she was a nurse. Well, she was under the command of Colonel O'Neill, which is Shaquille O'Neal's dad. And there were some investors from Florida. There were some founders from Florida. And I remember this in 1989. They came up because they wanted to talk to him and some people who he knew who had some money to invest. And they had a startup that they was talking about. They were going to be selling bottled water. They wanted to talk to people about investing in a company that sells bottled water. Now, remember, this is 1989. Nobody was doing that yet. Okay. 1989. So they came down. He told my wife told me about it, and I went to the thing. It was about 60-some people there. Went to the little meeting that they had, and they was telling us that we could invest money into this company that's going to be selling bottled water out of Florida. Now I'm thinking to myself, water is free. You can go to any restaurant and say, hey, can I have a glass of water? And people will give it to you for free. It doesn't cost anything. They even put a lime in it or something, and it's free. It doesn't cost anything. You go to the grocery store, hey, can I drink? Yeah, there's a water fountain over there. Go drink all you want. Walking down the street and walk up to someone's house and say, hey, ma'am, I'm awfully thirsty. Could you spare a glass of water? They'll probably give it to you for free. Give you a drink of water. Okay, water is free, right? So it just didn't register with me that this was a good investment to put money into selling something that's free. It just didn't register to me, right? I had an opportunity to get 2 million shares for $20,000. Now I had $50,000 in the bank. I had just gotten $45,000 from the military, U.S. government. A treasury check, right? I had $50,000 in the bank. I didn't do it. And to make matters worse, I convinced about 15, 20 other people not to do it. The people probably hate me now. Why? Because Zephyr Hills Water is now Waters Corp. $369.73 per share. So what would my 2 million shares have gotten me? So my 2 million shares of Zephyr Hills of Waters Corp right now would be worth $369.73 times 2 million shares. I'll be almost a billionaire. $739,460,000. That was my biggest mistake moment. Biggest mistake I ever made in my life. Because I didn't grasp the concept. I just couldn't see the vision. I just couldn't see it. It didn't make sense to me. But that was it. Now, granted, I turned them down, and 4 years after that, I was back in Florida, and I was going through an Albertsons grocery store, and what did I see on at least 2 or 3 rows of just shelves with just bottled water? And Zephyr Hills was like, all over the place. Made me sick. Okay? Made me sick. Because I knew I had missed out. I knew I had missed out. Okay? So you all are at that moment right now with Cachet. You have an opportunity to invest in the first peer-to-peer commercial vehicle rideshare for the global marketplace. A rideshare mobile application that connects commercial vehicle owners globally with renters. Featuring buses, vans, delivery vans, semi-trucks, box trucks, pickup trucks, construction vehicles and equipment, limousines, utility vehicles, tractors, trailers, food trucks, motorhomes, marine vessels, private jets, planes, helicopters, and more. Anything that's considered a commercial vehicle. Just imagine a mobile application for the global market that provides easy connectivity for individuals and companies to list their commercial vehicles and begin earning passive income and enabling millions to easily, conveniently, and affordably rent the assets they need to become entrepreneurs and business owners. That's Cachet. And you all have an opportunity to become part owners and early shareholders in Cachet. All right. That's all I can say. And we have packages starting as little as $36.62, going all the way up to $300,000. So you can come in and choose what package is right for you, and click on it and easily, conveniently get your shares. And within 48 hours, you'll receive your safe agreement. All right. Look, that's it. I thank you all for joining me. those of you who have joined me, who joined and watch, I thank you all. I appreciate you all watching. Look, help us to get to that 250K mark. We get there, and everything else is a wrap. Everything else is a wrap. All right. Thank you all. I appreciate you. This is Calvin. Go to our website at mycache.com. If you want to get involved, you need to give me a call. Phone number is right there on the site. Click the call button. It'll call me up, and I'll be happy to speak with you. You can send us an email to investor-relations@mycache.com. Thank you all, and you all have a great night. I've enjoyed it. Bye, everybody.